A lot of our subscribers are asking us to predict Cisco earnings. Since Cisco will be reporting earnings on August 16 after market, that's in 2 days, CSCO. And so in this video, we will analyze the unusual options activity today, August 14, to demonstrate how to apply this strategy to your trading and a very simple way to trade options without all the complicated strategies for earnings. So without further ado, let's get right to it. So Cisco made a 52-week high just very recently, 54.14. So let's take a look. On the options tape, time and sales, we can see here that today, 12:10 p.m., we had 1,250 contracts for the September 15, 55 strike calls and 55 strike puts. These are the most unusual options that happened today. Okay. This 61 strike call, September 8, that happened just 15 minutes before market close at 3:45. 1,000 of them, but this was only paying $5 each, so that's $5,000 times 1,000. So the value is not very high. Same with this here, just $2 here, right? So we want to focus on this number, okay? Because this number is a lot greater because they are selling the 55 strike puts and buying the 55 strike calls. And when they sell the 55 strike puts, each of these is essentially selling a naked put, which is a cash secure. They need to have 55, that's the strike price, times 100. That's 100 shares because they're telling their broker they're willing to own 100 shares of Cisco at $55. So for each contract, that's 5,500. And we have 1,250 times 1,250. So the value of this trade is $6.8 million. So this is why this is a much more meaningful and significant unusual options to analyze. Okay, so let's get right to it now. Take a look at the options chain. September 15, 32 days away. You can see here the 55 strikes. We see here on the call side here, on the open interest here, there's 36,000. This is greater than the 1,250. Okay, so that could mean that those 1,250 were closing trades, not necessarily opening trades. However, on the put side here, the open interest here on the 55 strike puts is only 1,034. This is less than 1,250. So we know now that the 55 strike puts are opening trades. And based on our experience, we know that when they are opening a trade on the put side, the probability of them opening it on the same strike on the call side is also very high. So we believe they are selling the 55 strike puts and buying the 55 strike calls. And when you analyze this trade, you can see that this is a long synthetic strategy. Okay, you can see here the price of Cisco at $54. As it goes up on this profit loss graph, the x-axis represents the price of Cisco. The profit loss will also go up because this is above the zero line. Anything on the zero here on the y-axis, this is profit. Anything below is a loss. So you can see that as Cisco goes down, this profit loss line is now below the zero. So that's a loss. You can see here the Greeks. We have 99.8 positive delta. So essentially very near 100 delta, which is what stocks are. When you own 100 shares of stock, that's 100 delta. one stock is one delta, okay? And that's what we were talking about earlier when we said that they're willing to own 100 shares at $55 strike price, okay? So now that we've analyzed these unusual options and we know now that they're bullish and going long on this, what can we do, right? Well, one easy way, if you only trade stocks, you can buy stocks, right? Now, if you trade options, the most simple thing to do for options trading, if you don't understand and haven't learned options, that is just to buy a call option at the nearest expiration date of the near the earnings. So it's August 18, 4 days away. You can see here, and you can pick a strike price that you think it would go up past. For example, 55 strike calls here. Okay, so they're currently going for about $70 each call option. So you can take a look at this, decide how much you want to spend, your position sizing. If they're $70 each, you can see that as the price at 54 goes up, this becomes profitable. It has to break even at expiration date on August 18. So that's actually $55.70, okay? Because that $55.70 is actually that $70 that you're paying. You have to go higher than that $55.70 to cover the cost that you initially paid to actually be profitable. Because this graph here is a profit graph. It shows the profit. It has already taken account your cost. So that's why you can just look at this graph and see what the profit is immediately, since it has already done the calculations here. Okay, but this is the most simple way of trading options, just buying call options. But there are risks to this, and it's not the best strategy because it isn't actually a strategy. There's a very, very negative theta decay here. Has a positive vega, which is also not very good for earnings trades, unless you're very sure of this directional that is definitely going to go up. But there's better strategies using options that if you're interested, we do have exclusive videos we share with our members on how to trade options with different strategies at different times based on different types of unusual options we detect. And so that's something to keep in mind, okay? If you are interested in also other stocks as well, we also share that with our members on our membership. If you join, click the join button on our channel homepage to learn more. We share other stocks with unusual options activity. That's most of the bulk of our profits all come from stocks not during earnings trades. Okay, earnings trades are actually higher risk than non-earnings trades. So we prefer to trade non-earnings trades with our members, because for our members, the most important thing is profitability. We want to share stock picks that have the highest probability of profit, whereas videos that we share on the public are based on popular demand. So that's something to keep in mind. If you are a member, this does not necessarily mean you should be trading Cisco for earnings, because we have lots of more better stocks to trade from our member trades. Okay, so keep that in mind. All right, so that is what we think for Cisco. Comment below on what you think is going to happen to Cisco for earnings in 2 days. Will it go up or will it go down? Take care, everybody, and good luck.